Hello everyone and welcome back to another video. Please consider subscribing. I really do love and appreciate all the subscriptions that I've been seeing lately. If you like personal finance videos, if you like stock videos, please consider subscribing. It would really help me out a lot. Now let's get right into it. Let's do some stock analysis of Google, aka Alphabet Class A shares. So GOOGL. And as we can see, this is a pretty strong buy. There's about 31 ratings, with 30 of them are buys and one is a hold. So this is a strong buy, and we can see that it has about a 16% upside from where it currently is. And let's see the stock analysis part of it. And Google looks like it's a 7. It's better than mediocre and average, but it's not that great. And that's just how the analysts feel, even though it's a strong buy, which makes sense, but it also doesn't. Let's get right into the financials. So what we're going to do is we're going to look at the financials. That includes the income statement, the balance sheet, and the cash flow statement, and then we'll see what a portfolio of Google does since its IPO. And it's actually pretty disappointing, just to let you know, not even 2 minutes in, that if you saw my Penn National, Apple stock, Microsoft stock, those you'd be doing way better if you had invested in those. But let's just get right into this and see where Google is going from here. So in 2020, Google had about $182 billion in revenue, which is absolutely insane that in only about a 5-year span, they've doubled their revenues. Talk about compound annual growth rate to see top line revenue grow like that, to be literally double since it was 5 years ago, just in 2016. Wasn't that long ago. um, so let's look at the net income now. And net income, of course, Google, not doesn't have necessarily any physical products other than like Chromebook. I mean, like its core products are like YouTube and search. So those are not physical products. So a lot of Google's overhead comes off of things that are online, on the internet, virtual. So there's not a lot of overhead with that, unlike their products like Chromebook, Chromecast, Android, stuff like that. That has cost to it, way more cost and overhead than their simple, internet things do. Even still, they show a great net income. Look at that. I mean, that is crazy. That is about, a as good of a net income as you'll see, especially growing. Again, top line revenue has grown double since 2016, yet so has their net income. Their net income has doubled since 2016, and that is just insane. So let's go to the balance sheet. The balance sheet, as we can see, they've also steadily been growing their cash pile. That's interesting because we want to see what Google is going to do with this cash pile and what does it mean? What does it mean to have this much in cash, and what are they going to buy? What could they possibly buy, with that much money? Leave me a comment below. What do you think Google could buy with that money? And let's see, total current assets is about 174 billion, and their total current liabilities is only 56 billion. This is incredible. This is definitely a reason worth investing. In the long term of Google is 174 to 56. That blows that out of the water. They have 3 times more current assets, than they do current liabilities. That is incredible working capital. Nice job, Google, to be so big, and yet you still have, that much wiggle room to make sure that you don't hinder yourself from growing. Good for you. And now, long-term debt, this actually doesn't make any sense. I mean, it makes sense, but it doesn't. Why is this so much other than low interest rates? It's kind of confusing. So why did this triple? Why did this go up 3 times? Why did their long-term debt go up 3 times more? Is that because they're expanding into different places? Maybe, because obviously now they have operating lease liabilities, non-current, as growing too. So I just don't get that part. That's not where you really want to see. Like Google, just why even bother having debt at your size with that little amount compared to like you could just wipe that out and still have 13 billion in cash. And we'll get into their cash flow next, but they're a cash flow machine too. Why not just wipe that out? What is the point in having this? Honestly, just get rid of it. That's like over here. That's crazy to have like almost 2 billion in debt when had, let's see, 2 billion in debt when you made 74 billion in a year in 2015. Get with it, Google. Come on. Anyway, so that's interesting. So we wanted to look at that. Now let's look at the cash flow statement. Obviously, strong cash flow statement because they had about 40 billion in profit or net income. And let's see. Let's go down to the long-term debt issuances. Obviously, here we saw that they issued 11 billion, more than they've ever issued since 2015. So in about 6 years, they issued more debt than they had ever before that time, and they repaid about 2 billion. So, I mean, it should be in line with how these ones are. You issue 13 billion, you pay off 13 billion. You issue 8, you pay off 10. You issue 4, pay off 4, issue 6, pay off 6. That's very lopsided. I don't really get the CFOs standing on that or why they would do that. And they also bought back a ton of shares, about 31 billion worth of Google stock is what they bought back. So that is crazy too. And they don't really pay a dividend, so there's really not much to talk about there. Let's look now at a portfolio of Google. So if you had invested in Google at its IPO in 2004, then you would see, a pretty mediocre return of about, if you invested $10,000, you only see about 209,000, which is only 20% compound annual growth rate. That's not that great for, a company that is so strong in the tech industry and such like a monopoly, really, when it comes to search, and a duopoly when it comes to phone operating system, Apple and Android. This should be a lot higher. This should be like 30%. If we actually look at the annual returns, it's very mediocre. Look at 2011, 8%. 2012, 9%. What? 2014, negative 5%, 1%. Almost, close to 0% in 2018. And then the last few years, like it's only been okay. This should be a lot better. This should be a lot better than what it is. And Sundar Pichai could definitely do a lot more, especially considering how his, how strong his financials are. He's in a great position, and I really do hope that Google buys something big, like soon, because I'd really like to see what they can do with that massive cash pile. And something like YouTube, I think, can definitely be, almost like a platform of like Spotify and stuff like that. Like they could definitely do more with music and their YouTube TV, which I almost considered buying like 2 years ago, but it was like $40, so that's way too expensive. That's almost like having cable. And yet, that kind of hinders YouTube because they could bring that kind of thing at a very low cost to get people interested rather than they started out like a premium high cost and not that many people interested. So anyway, let me know what you guys think about the video, and please subscribe, and I'll see you again soon.